thriving business.
Looking for small caps on
It all
pullbacks,
starts with that one
and
simple
really
step.
playing for a recovery next
So
year.
what are you waiting for?
And Paul, just really quickly here,
Grab
we
your
have about
phone,
30 seconds left with
hit
you,
record,
but if you did start to
and
see
let your idea
some
fly.
of those buying opportunities,
The future
open
of
up,
your
what are the
startup could
sectors,
be
what are
just
the
one
industries
video
where
away.
you would be looking to
Remember,
catch the knife there?
Be clear,
Yeah, definitely
be
cyclical,
passionate,
so we've
and
liked
most
industrials
importantly,
for a while
be
now.
you.
Energy,
We can't wait to
financials
see
have
what
been a
you've
big
got.
player lately.
Let's get funded now.
They get the benefit of deregulatory expectations plus a stronger economy. Financials to throw in there too, and we like comm services, communication services here as an alternative way to play tech.
All right, we're gonna have to leave it there, but thanks so much for joining us, Paul. Really do appreciate it. Paul Christopher, head of global investment strategy at the Wells Fargo Investment Institute, joining us this afternoon from St. Louis. Just about 10 minutes to go until the market close. Coming up next on Bloomberg Business Week, it's our simulcast of the market close. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
It is Bloomberg Business Week. What would you like to hear about on Bloomberg Radio? Well, make shows like ours even better by taking our Bloomberg Audience Survey. Visit youtube.com/podcast and click the link in our profile or community section to take the survey. It's hosted by our partners over at Material. Fill it out now at youtube.com/Bloomberg Podcasts. You've heard of Make America Great Again.
I have.
Started out with Reagan before our time, and then Trump again. What about Make America Healthy Again?
Maha?
Is that how you say it?
Yeah.
Okay.
How would you say it?
I didn't know if the H was silent.
No,
So you just-
that would just be Ma. No,
Yeah.
Make America Healthy Again. It's spreading on social media, Tim. Of course, it's a push that's led by Robert F. Kennedy Jr. to really clean up U.S. food production. Talk to me about it.
Okay, so he's been promised a role in health and food safety by the incoming Trump administration. However, his views have long drawn scorn among public health experts who oppose some of his stances. Here are a few of them.
Go on.
Anti-vaccine. He's got demands to remove fluoride from drinking water, which, by the way, do, according to experts, great things for preventing tooth decay.
Yeah, for sure.
He's also advocated for drinking raw milk.
Delicious.
Have you had it?
No.
Okay, I don't know how you could say it's delicious then. It makes the U.S. FDA says that that can cause serious health risks. You can get raw milk.
Yeah,
in places.
From a cow?
From a cow, you can get it in Pennsylvania. I don't know if you can still get it, but I've been with people who are like, we're in Pennsylvania, and they're like, actually, I got to go buy some milk.
Things are different here.
I got to go buy some milk before we get back to New York.
Gotta get my
and then
milk
go buy
fix.
raw milk.
Yeah, so...
The problem is you can have disease and bacteria growth in that raw milk.
Which is super bad. But Tim, you're somewhat of a health freak, I would say.
I would
you
say
don't
that's
eat
true.
things like sugar.
I mean, I eat sugar.
Yeah, but like I
Sparingly.
eat Chick-fil-A for lunch, and you definitely judge me. How do you feel about some of these proposals?
Look, I think there's a reason that these proposals are gaining popularity. Some of them, I don't think you can put a blanket on and say all of these proposals are bad.
Yeah.
Like the idea of eating less processed foods is probably a pretty good thing.
Did you see Chamath's tweet yesterday?
No.
Chamath Palihapitiya, his post on X, I should say. He was talking about how he spends 6 to 8 weeks every summer in Europe. Super relatable already. But how he doesn't necessarily exercise or eat much different when he's in Europe, but he loses a lot of weight while he's there, relatively speaking, without doing anything.
Because of the food, he's implying that the food is different in Europe.
Exactly. He comes back to America, doesn't change anything, and gains weight. So
I'm sure
you see a lot of posts like that.
I'm sure Chamath could afford to import all of his food from Europe and not eat one other thing that is produced in America.
Yeah.
So, yeah.
Yeah, I haven't checked on how his SPACs are doing recently.
I have not checked on those either. But he called himself a few years ago the next Warren Buffett.
Yeah, that was pretty cool when he did that.
Yeah.
Real sign of the times.
Very big podcaster now
Yeah.
with the All In podcast. Also a Trump supporter, somebody who sort of moved to supporting Trump after supporting other candidates in the past.
That's true.
Look, I think there is a lot to be said about the food that we eat in the U.S., but I think that it's going to be a tough battle with typical science.
Yeah.
Because a lot of the science points to stuff that is not necessarily in line with what RFK Jr. wants to do.
Well, just harping on the difference between America and Europe, one of the details in this great article is that one place that Kennedy has promised to start is with artificial dyes that are used in American kids' cereals.
Who can't get behind that?
Red-free.
Who can't get behind that?
It's banned in most uses in Europe, so there's a stark example.
And a few weeks ago, there was a protest outside of Kellogg's headquarters about this.
Wow. Yeah, I think
And it was
actually,
part of the whole part of Make America Healthy Again movement.
Didn't we talk about that on the simulcast?
I think we probably did, yeah. There are a couple names that are being floated as being part of the Trump administration as well. Dr. Casey Means, she wrote a book about this. She sort of left her typical doctor profession to go on this, to become essentially an activist. And she's really aligned with RFK, so we'll see if her name comes up.
We'll see, and we'll see, of course, what RFK Jr.'s role is in the Trump administration. All those names coming in fast. It'll be a fun space to watch.
It really will. Hey, also a fun space to watch is this one because we're about to see the markets close. And coming up next, it's our cross-platform coverage. The closing bell starts right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic here, taking you through the closing bell alongside Scarlett Fu, a global simulcast. It starts right now. Tim Stenovic in the radio booth, Katie Greifeld by his side in today for Carol Masser as we welcome our audiences across all of our Bloomberg platforms, including our partnership with YouTube. Tim Stenovic, how are you?
I'm fine. Stocks don't go up every day, though.
They don't.
I thought they went up every day.
They don't.
They
Bitcoin
don't.
doesn't go up every day either.
Well, it does. You got to prove that.
Okay.
Yeah, I don't know about that.
Yeah.
Still, though, yeah, like we've been saying throughout the day, the rally that we've seen post-Trump's win is taking a bit of a pause, but we're still up 3.5% just in the last 5 days on the S&P 500.
Yeah, for context, we're close to all-time highs, and you have to think there's some profit-taking going on right now. A lot of enthusiasm appeared in the market over the past week, and you're seeing it drain out of some of the places that really had been inflated. Do you think about small caps really taking it on the chin today?
Yeah, but some parts of the Trump trade are still intact, right? The dollar continues to move higher. That has not really slowed down. And yields after a 3-day weekend, the bond market is selling off once again.
I just want to tell you, we keep talking about how kind of the Trump trade, at least for today, is on pause. Two of the biggest stocks on a percentage basis moving today, which I didn't even know still existed, Fannie Mae and Freddie Mac.
I did not know those were stocks necessarily.
Freddie Mac up 26% here on the day. Fannie Mae up about 20%. In fact, both are up more than 70% since the election. I'm not exactly sure what people are speculating on. I guess, I don't know. Something? Can you help me out, Katie Greifeld?
No, I can't.
I know you're a big Fannie
I was
Freddie person.
prepping to talk about Machine Gun Kelly, so you caught me in the cold.
Yeah, I did a lot of research. The first thing Katie Greifeld, who apparently is a big fan of the program, when I mentioned that Megan was pregnant, was she didn't know they were still together. So I went down a rabbit hole last night, so I have a lot of stuff to talk about with you later, Katie.
Who knew that you were such a font of information on Machine Gun Kelly?
Absolutely.
Talk offline.
I'm an expert. All right, let's talk about what's going on in the markets today here. Right across the screen, a bit of a pullback from what we saw over the last 5 days. The Dow Jones Industrial Average down 0.9%. The S&P 500 down 0.3%. We're going to call the NASDAQ down about 0.1% here on the day. But the big decliner, believe it or not, some of those domestic-oriented stocks that have really been a big beneficiary of the Trump trade, the Russell 2000, down 1.8%.
All right, taking a deeper look in the S&P 500, we did see more stocks move lower today than higher. 359 to the downside, while 143 stocks advanced today, Scarlett.
All right, let's take a look at the IMAP, which really maps out the sector performances, and a lot of red there, with 5 groups down more than 1%, led by materials, healthcare, and REITs. Those groups down anywhere from 1.3 to 1.6%. Your better performers here are communication services, infotech, and consumer staples, but none of them gaining more than half of 1%.
All right, let's do some gainers as we continue to await for earnings to come in.
Can I interrupt you again,
please?
Tim Stanovic? Just because I just, no, not Skyworks, my producer. Stuart Paul over at Bloomberg Economics, he actually just IB'd in and says that the reason why Fannie and Freddie are rallying is because they've recapitalized and released
It's an
on Fannie Mae
expectation
a
that's
pet
out
project, Katie Greifeld, of your friend, your homie, Bill Ackman.
I don't know if we're homies, but that is something that Ackman has talked about in the past. Unclear, as Stuart Paul points out, whether he's still in the preferred shares necessarily, but you were talking about speculation. What are people speculating on when it comes to these two names? It could be that, Romain.
Yeah. We have earnings, I'm told.
Yeah. I want to get over to Skyworks because we're seeing shares move higher in the after hours, up by 3.5%. Fourth quarter adjusted earnings per share did beat estimates. The company sees first quarter adjusted earnings per share coming in below estimates at $1.57. Estimates were for $1.69. The company sees first quarter revenue coming in about $1.05 billion to $1.08 billion. That's shy of estimates of $1.09 billion. But for the previous quarter, fourth quarter revenue coming in above estimates or within line with estimates, and then adjusted operating income coming in just shy of estimates. Shares in the after hours right now higher by 5.7%. Okay, as we do await other earnings, I do want to get to some of the stocks that did move higher in today's session, starting with Tyson Foods. Intraday, the company surged the most in more than 2 years. It did rise by 6.6%. It beat fiscal fourth quarter earnings estimates. It projected stronger results next year. Chicken, it's so hot right now.
Yes.
A turnaround in its chicken business, offsetting losses in beef.
Feeling bullish on chicken.
It's Tyson's second largest source of revenue.
How long did it take you to come up with that, Katie?
I actually made that joke earlier this morning. So.
Okay, so
wait, you're recycling jokes on the clothes?
Big time.
Different audiences. It's okay.
The demand for chicken has improved as consumers are looking for cheaper alternatives to beef. Plunging prices for corn and soybeans also made it cheaper to feed those animals. Also, shares of Honeywell International surging today. This after Bloomberg reported that Elliott Investment Management has built a $5 billion plus position in the company, and it's pushing the company to pursue a breakup. Shares ended up finishing the day higher by about 3.9%. And finally, Shopify shares surged after the company reported third quarter results that beat analyst expectations. The company also gave a strong outlook.
All right, let me just jump in here because Spotify did come out with some numbers here, and Spotify's third quarter revenue was just under 4 billion euros when analysts were looking for 4.03 billion. Gross margin for the period was 31.1%. That is higher than what was anticipated. And the total premium subscribers, 252 million, also slightly higher than what was anticipated, 250.06 million. And monthly active users, 640 million, compared with the consensus estimate of 639.
Yeah, it's really interesting to see this big reaction in Spotify, given that the shares were already higher by about 123% year to date. So it was a high bar, and it takes a look. It looks like that Spotify has surpassed it, at least for right now. You take a look at that stock reaction.
And it's a big deal also because this was the quarter in which they raised prices. So clearly investors are swallowing that and continuing to pay up.
Spotify share is up about 8% here in the after-hours trade. To the downside, Instacart, Maple Bear, the formal name, those results out. Revenue in the most recent quarter coming in at about $852 million. That is a beat. The bottom line number, $227 million on an adjusted EBITDA basis. That is also a beat. The outlook for the fourth quarter, though, this might be why you're seeing weakness in the shares. Adjusted EBITDA of $230 to $240 million. The top end of that range is below the average of street estimates. Instacart also saying that fourth quarter gross transaction value will come in the range of $8.5 to $8.65 billion, and that outlook includes the Ahold outage impact as well. Shares now moving even lower, down about 8%, Katie.
All right, very much in earnings season. Let's talk about Flutter as well, coming out with numbers, narrowing its full year U.S. revenue forecast. Taking a look at some of the numbers over the third quarter, though, the adjusted EPS coming in at 43 cents. The estimate had been for 68 cents. Revenue, though, coming in heavier than expected. Third quarter revenue in at $3.25 billion, above estimates of about $3 billion. And you take a look at full year adjusted EBITDA, it's seen between 670 million to 750 million. That is above, or interesting, you take a look at the past range, that was between $680 million to $800 million. So a narrowing there. You can see shares moving up a little bit right now, currently higher by about 2.4%.
I'm going back to Maple Bear, also known as Instacart. I'm picking through the investor letter. The font is small, the pages are many, 20 pages. But one thing that the company talks about, which I find really interesting, is integration with different companies. So, for example, if you want to order Costco to be delivered, you got to use Instacart there. So you might not necessarily be an Instacart member or use Instacart in any other part of your life. But if you want Costco groceries delivered to your home, or they say Sprouts groceries delivered to your home, you got to use a platform like Instacart. The company is continuing to push more of those partnerships as we speak.
Yeah, the exclusive partnerships is what makes the difference, right? And sometimes people, if you don't have those other options, you just have to pay up for it. Really interesting that Instacart is the read that Instacart gives us on consumers' willingness to spend on, sometimes you would think it's discretionary purchases, but in the case of groceries, a key staple purchase.
Yeah, I mean, I am curious, though, too. I mean, I wonder if they can articulate on the conference call as to how they kind of keep the growth going. I mean, the partnerships certainly help here, but I know there was a lot of talk in the past two earnings cycles that we had with them that the uptake, meaning the number of people who were using home delivery, and this is primarily here in the U.S., that had not only tapered off, but in certain markets was actually falling.
It's really interesting to think about the human psychology piece as well. When you think about Instacart, so many people were ordering online their groceries during the pandemic. Yeah. And that's one of those behaviors that really stuck. I mean, I know a lot of people who, even though they live in the suburbs, they have a car, they can go to the grocery store. It's just easier to order.
Yeah, absolutely here. So we're keeping an eye on that. One of the big movers in after-hours trades, Flutter as well, Spotify, your big gainer here in the after-hours trade as we wrap up our global simulcast here of a breakdown here of what happened in the market today, our cross-platform coverage of the close right here on Bloomberg Television, Radio, and YouTube. But we are going to stick with our radio colleagues for just a bit longer here. They have a sit-down interview coming up right now with the CEO of Delta, Ed Bastian, and the CEO of Wheels Up, George Mattson.
All right, thanks so much for that, Romaine. Well, last month, Delta Airlines forecast profit and sales that fell short of Wall Street's estimates for the final months of the year, suggesting a slow recovery from a challenging summer travel season. For an update on the business and the latest on Delta's partnership with the private on-demand aviation provider Wheels Up, we bring in Ed Bastian, CEO of Delta Airlines, and George Mattson, CEO of Wheels Up, both joining us from Atlanta. We should note that Delta does own close to 40% of Wheels Up. That's according to Bloomberg data. Guys, thanks so much for joining us. We're going to get to the Wheels Up partnership and the exciting news that you guys have when it comes to new aircraft. But I wanted to ask each of you the same question that I've asked every CEO that I've spoken to over the last week. Ed, I want to start with you. What does a second Trump administration mean for Delta Airlines?
Well, I think you've seen from the market's reaction, there's a lot of optimism in the corporate community. I know for Delta specifically in the aviation industry, the former president, now the current president-elect, knows our industry quite well, was very supportive as we worked with him in his previous administration, particularly as we went through COVID, got the support. We were the original industry that got the CARES Act started and the support to keep our employees employed. And we look forward to continuing to work with him in a second administration.
What about, Ed, when it comes to regulation during the next administration? Because I think many people would say the Biden administration took what some would call a hostile stance on airline M&A. Do you expect that to change under Trump? Will it lead to a new round of airline consolidation?
I don't know about consolidation. I guess that's possible, but I can tell you that the Biden administration, particularly the Department of Transportation, who we work most closely with, we were quite frustrated with the amount of regulatory overreach that we saw continuously through the last 4 years. And we hope there's a new sentiment that's pro-employee, pro-consumer, pro-business, and a good balance between the three.
And George, let's ask that same question to you. You think about a second Trump administration. What would that mean for Wheels Up?
Yeah, thanks, Kate. I think as Ed said, the prior administration, or in the prior administration, obviously there was a strong support for aviation in general, U.S. aviation in particular. What really drives our business as much as anything else is a good, solid, strong economy. Obviously, the markets have reacted very positively to the results of the election, and the economy appears to be quite strong and resilient. And I think ultimately that's going to support our business plan going forward.
And let's also talk, of course, about the relationship between your two companies, Delta and Wheels Up. And Ed, I'll ask you this question. Delta, according to our data, owns more than a third of Wheels Up. You've also supported Wheels Up with credit and access to capital. Why own so much of Wheels Up? What is in it for Delta?
Well, what's in it for Delta is the opportunity to create a new level of premium in commercial aviation that hasn't previously existed in terms of a partnership, and more than just a partnership, it's an ecosystem that's linked between private and commercial. We know many of our private aviation consumers also fly commercial, fly in Delta, and we want to make it easier for them to make those choices when they have the opportunity to fly private, and vice versa. When there's private aviation consumers that may occasionally need a commercial flight, whether it's going to Europe or some other place, we want Delta to be their airline of choice.
Ed, would you consider buying the company completely?
No, that's not in the cards. We deliberately wanted to make certain we had investors with us when we made this decision. And I think having the external validation of investors beyond just Delta was helpful.
Hey, George, I want to talk about the fleet because there was big news last month when Wheels Up said it would buy the Embraer Phenom fleet from Grandview Aviation. It's a $105 million deal. It's part of this 3-year plan to transition to Embraer and Bombardier Challenger aircraft. You're also, though, moving away from Cessna Citations. What's the thinking behind this, apart from just a newer fleet?
Yeah, thanks, Tim. When I arrived here just over a year ago, having spent 11 years on the Delta board, we obviously had a number of first-day priorities, but one of the priorities over this first year was building a long-term strategic plan and a fleet plan that supports that plan. We have a significant, loyal, strong member base, a really strong brand. Most of our members have been individual leisure customers. We are increasingly becoming a provider of choice to corporate customers. I think through our Delta partnership, that's only going to become more important going forward. As we looked at our fleet, it was a little older than we wanted it to be. And it was a little bit more complex than we wanted it to be, with 4 fleet types operating, which we've now distilled down to 2 fleet types. And in deciding to modernize the fleet, what we did is we basically selected the 2 most popular aircraft types in their respective categories with the deepest install bases, the largest secondary markets, in order to be able to buy those aircraft at fleet scale over a period of time. This is going to really significantly transform the product offering we're able to deliver to customers. The experience, the reliability, the efficiency that comes both with the aircraft themselves and also the simplification of the fleet. We're going to enhance that fleet with best-in-class connectivity. I think Delta was a real leader in providing free, high-speed satellite Wi-Fi on their aircraft. We've announced a commercial partnership with GoGo to provide a similar low Earth orbit satellite Wi-Fi capability on all of our aircraft. We're very excited to have been able to jumpstart this fleet transition by acquiring Grandview, which has the largest fleet of on-demand Phenom 300 and 300Es in the market. And that transaction is going to close very, very soon. And we're going to immediately be able to offer that at fleet scale to both our charter customers, but also our programmatic member customers. And I think when you look forward at the progress we're making financially in the first year, this fleet modernization is an important unlock for the next phase of that profitability journey as well.
And I also want to talk, of course, about Delta's fleet. And Ed, we have to talk about Boeing. You're a major Boeing customer. And to put it mildly, the company has had a lot of problems. They've recently raised new capital, though. They've gotten past the worker strike. But that being said, how quickly do you expect Boeing to actually get back on a normal production schedule here? And are you anticipating further delays when it comes to deliveries and certifications?
Well, we're, as you may know, not anticipating any Boeing deliveries because we have none outstanding in the next couple of years. So in the immediate term, we're not impacted at all. But I do believe that they have made the right decisions around raising capital to invest in their business, around making certain their employees are properly taken care of and compensated, and so they can get back focus on delivering high quality airplanes to our industry. I think it's going to be a number of years before you see a steady stream of airplanes starting to return, and we'll hopefully sooner. But I think we are all realistic that this is going to be a very challenging turnaround still to come.
When you say a number of years, would you count that number on one hand or two hands?
A couple fingers, how's that?
Okay, so a couple. I like that. Hey, we're speaking with Ed Bastian, CEO of Delta Airlines, and George Mattson, CEO of Wheels Up, both joining us from Atlanta. Ed, while we have you, give us an update on capacity in the market here. We hear it's improving, but is it improving for both premium and economy seats right now?
The market has rationalized. I think this past summer we saw in the U.S. marketplace there were a lot of seats for sale, had a pretty big impact on pricing. A number of the airlines, particularly those on the lower end of the price scale, have been struggling. Most of them have lost money this year, lost money in the peak summer even, and have had to implement a number of self-help measures to ensure that they can find better balance between supply and demand. On the premium side, that's where the growth has been in the industry, and Delta has led the way. And any of the airlines, there's a couple of us out there that are more focused on premium, have done quite well over the past couple of years. Over those that are more in the commodity sense, where price is the principal determinant of the consumer purchase, they've struggled, and they continue to struggle, and that's why you see the supply being rationalized.
So that's the view on the commercial airline demand. George, give us a peek inside what demand for private airspace looks like, because you think about coming out of the pandemic, we know that there was a big uptick when it comes to private jet travel. What are you seeing right now, especially as we head into some of these peak travel demand periods?
Yeah, I think in general, I would just say that the industry remains quite healthy. We certainly saw a very big sort of demand bubble from COVID, and when people did start returning to flying, a lot of folks who hadn't flown private had started to fly private, and so we've seen that, I would say, normalize. The industry feels relatively stable here, but I think when you look kind of medium and longer term, has really strong kind of macro headwinds, right? I think the vast majority of aircraft, private jet aircraft, are still wholly owned by individuals or corporations. And so the opportunity for on-demand and fractional providers to continue to grow, I think, remains very strong. as commercial aviation becomes in some ways more challenging with congestion and other challenges, I think it becomes a more interesting alternative. And I think one of the really interesting things about what we're doing with Delta is really trying to break down the barrier that has always historically existed between commercial and private aviation into one, seamless aviation solution. And so I think as we are successful in doing that, we're going to draw more participants into the industry, hopefully through our offering, and expand the market in the process. But to answer your specific question, I think generally things feel quite healthy right now.
Yeah. So George, help us understand the profile for somebody who would, maybe they're a Delta One customer, but they're also able to fly Wheels Up. What does that look like from an income perspective, a net worth perspective, where they'd actually make the jump and they'd make that choice? The most recent Bitcoin rally, not necessarily withstanding.
Yeah, look, there's different cuts at sort of what level of income or net worth constitutes the ability to fly private. I've seen numbers in the mid-single digit millions of dollars of net worth. I've seen numbers that are higher. I've seen a study that suggests 90% of people who can afford to fly private under that definition have never flown private. And so, you have, if you think about our partnership with Delta Airlines, a couple of really big pools of potential customers. One is the 45,000 or so Delta corporate customers, where Delta is often the leading provider of travel, period, to that company. And so we're offering this within that framework as an additional alternative, as a sleeve, if you will, of an existing broad corporate agreement. And then when you look at the individual customer, which is sort of the gist of your question, there are many, if you believe that 90% of people who can afford to fly private have never flown private, well, where are they? They're in the front of the cabin generally at the commercial airlines. And, there may not be, flying private every time. But again, this idea of a solution that could be commercial or it could be private or it could be a hybrid of the two is where I think we're going to find demand from those customers. And I think there's a lot of them out there who don't quite know how to access our industry quite yet, and we're trying to simplify that.
Hey, Ed, I got another capacity question for you, because I know that you're already thinking about how things look in 2025. We're already looking forward to spring break and summer, peak flying season. With Boeing's recent strike, geared turbofan maintenance, do you see a shortage of capacity across the industry, or at least at your airline?
I would expect for the next year, though we haven't given guidance for next year. Actually, stay tuned. Next week, next Wednesday, we have our Investor Day in New York, so maybe you can get some insight then. I expect the industry is going to move as the economy moves. This is an industry that's driven by the economy, not just U.S., but on a global scale. And for those carriers that are premium, such as Delta, we have the ability to drive probably a little higher capacity than the broad economic growth.
Okay, and Ed, I know that, well, I don't know, actually. It doesn't seem like there are still any lingering effects when it comes to the CrowdStrike issue that you had over the summer. I know you recently filed a lawsuit against CrowdStrike. You've said you've suffered about $500 million in financial impact from that event. As the dust has settled, what are the long-term implications? What's the financial implication?
Well, the implication is exactly what you said. There was a $500 million immediate impact from those 5 days, and there were additional damages on, obviously, the brand and the remaining impact, as it took some time for our customers that were really disappointed to come back to Delta. So all of that's included in the lawsuit that has been filed and will be pursuing vigorously. But from a go-forward basis, we learned a lot. We thought we were surrounded by the very best that you can protect yourself with, both CrowdStrike and Microsoft. And we realized that you can't take these guys at anywhere close to face value in terms of what they tell you they're responsible for. Wow. So we've all learned to dig in deeper as to how these systems and processes flow. And it's not just Delta. I think it's the world at large. There were thousands and thousands of companies that were impacted on a global scale, not realizing how CrowdStrike was injecting directly into the kernel of their operating systems potentially faulty code, and then Microsoft distributes it. So that was a huge learning for us, and we've done the audits immediately, and will be. We've already made some pretty significant changes in our technology security infrastructure to prevent that from ever happening again.
Well, really appreciate the detail that you gave us there. We'll keep an eye on that lawsuit. But while we still have you guys, only a couple minutes left. Most people think about commercial and then they think about private. But George, I'm really interested to hear about how you're thinking about these charter operators, such as JSX, for example, where you can get on a 30-seat jet at an airport, either a private airport or a commercial airport, and they seem to be a lot cheaper than, of course, chartering a private jet. Is that a threat to your business? You think about the convenience and the affordability of some of these operators, and they seem to be picking up steam.
Yeah, no, look, there's certainly been some progress made in the introduction of this sort of hybrid commercial private by the seat product or alternative. It's still quite different than private aviation, really more akin to commercial aviation, frankly. In that, you know, you're buying a seat, it's not private, it's scheduled on their schedule, and so on. So look, there may be a place for it. I mean, it's operating under a fairly unique set of regulations called Part 380. It's a bit of a different construct. It's being looked at in different ways by different folks. But look, we see it as an alternative that certainly people consider. Look, if you're one person or two people traveling and you're looking for something other than commercial, and you know you don't want to get your own plane, it sort of fits that niche of the market, if you will. If you're traveling with your family or a larger group, frankly, a private aircraft of your own can make as much economic sense as that alternative. But look, there certainly has been some growth in that segment, and it remains to kind of be seen where it goes from here.
Hey, guys, really appreciate you both joining us and spending quite a bit of time with us this afternoon. I know you're both busy. That was Wheels Up CEO George Mattson, also with Delta CEO Ed Bastian, both joining us from Atlanta. Thanks again. Of course, the big news that they have is that Wheels Up is modernizing its fleet with that big purchase that they announced last month of Embraer and Bombardier jets. Well, a lot happening in the after hours here as well. Fortunately, Charlie Pellet has got an eye on everything. Let's get an update on business news and what the markets are doing. Hey, Charlie.
Absolutely right about that, Tim. We got you covered. Let's begin with Spotify. Out with earnings after hours. Spotify up now by just about 9%. It did report third quarter growth in subscribers and profit margins, saying lower marketing and personnel costs helped the music streaming service overcome a tough climate for advertising. Again, after hours, we got Spotify, SPOT on the ticker there. It is up by just about 9%. Instacart, meanwhile, posting strong revenue in the third quarter, a sign of resilience in its core grocery delivery business. However, it forecast adjusted earnings in the current period that did fall short of analyst expectations. After hours, looking at shares of Instacart down by roughly 4%. Turned out to be a down day on Wall Street, perhaps putting it mildly, with the Dow, the S&P, NASDAQ all slumping. S&P ending the session below 6,000 at 59.83, down 0.3%. The Dow dropped 382, down by 0.9%. NASDAQ down 17, a decline of 0.1%. Russell 2000 particularly hard hit today after its recent surge, down 1.8%. 10-year 4.42%. The 2-year ahead of the CPI tomorrow morning, 4.33%. Gold down $20 the ounce, down 0.8%. And West Texas Intermediate crude little change, 68.01 a barrel, down by less than 0.1%. Bitcoin right now up 1.1%, 88,979. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Do appreciate it. Katie, I know I asked you this earlier. I don't know if we were on air, though, but about going to New Jersey and seeing the leaves and the fire danger?
Yeah, I can't actually remember if we were on air or not. But yeah, no.
We're always on air.
Always. Well, I live here. But anyway, yeah, no, it was wild this weekend waking up in Manhattan, seeing the air quality index above 100. Haven't seen that in a while. I had to flee to New Jersey, at least where I was going in New Jersey.
Well, I have bad news for you.
Yeah.
There are wildfires in New Jersey. And according to the Associated Press, it's been the driest September and October ever.
Yeah.
New Jersey is now going to issue a drought warning. It could be a step that could eventually lead to mandatory water restrictions if significant rain doesn't fall soon. I'm from California.
Yeah, no.
This is like what we deal with all the time.
I made a joke, actually. I was going to horseback ride, and I made a joke to my barn manager, my barn owner, that is.
Relatable.
I feel like we're in California. I'm like worried about wildfires. We're praying for rain, but we're in the great state of New Jersey.
So that plus the fire in Prospect Park on Friday night, the hurricane intensity that we saw, rising insurance prices.
Scary stuff.
These are things that we can see coming as a result that many scientists would argue of a warming planet, of climate change. But there are also hidden costs of a warming world. And that's what R. Jin-Sung Park writes about in his new book. It's called Slow Burn, The Hidden Costs of a Warming World. Jin-Sung Park is assistant professor at the University of Pennsylvania. He's also an environmental and labor economist. He joins us this afternoon from New York. Jin-Sung, good to have you with us. It's remarkable to hear that there are hidden costs here, because this is something that I think is so visceral for so many people, no matter where they live right now. So what's hidden right now?
Yeah, well, first of all, thanks for having me on the program. I was smiling a bit when you were, in the intro talking about the wildfires in New Jersey. Certainly something that my wife and I experienced a lot of when we were living in California. But that's a great case in point of the hidden costs. I mean, when we talk about wildfires, typically what's most salient and visible are the flames, right? They burn down homes. They force us to evacuate. That's very destructive. But at least according to recent research by researchers at Harvard and Stanford and elsewhere, the hidden costs associated with wildfire smoke may be just as damaging, if not more so. The last numbers that I saw suggest that maybe dozens of people have died due to wildfire flames in the past several years in the United States. But the estimates are that anywhere between 5,000 and 15,000 may have died every year due to the additional air pollution caused by the wildfire smoke, which, as you may know, can travel large distances. So that's just one example of the many hidden costs. I mean, just to take a step back, one of the reasons why I wrote the book is as you mentioned, climate change has become such a visceral issue, but it's also a very complex issue, and we all need sort of simplifying mental heuristics to help us think about it. And for better or for worse, I had the observation that a lot of the discussion around climate change is tended to have sort of a black or white kind of almost fatalistic hue to it. And that's useful if you think about, it's useful to think about climate change, of course, as sort of an insurance problem, right? How are we insuring against the risk of potential planetary catastrophe? That's obviously one important way to think about it, but one of the additional mental heuristics that I certainly hope we can add to our toolkit is to think of it as a slow burn, right? As not so much an imminent crisis for all of life on planet Earth, but more of a slow burning kind of degradation of quality of life crisis that is already unfolding, sometimes in visually salient ways, but often in hidden ways.
Well, if you think about it as a slow burn, what does that mean in terms of addressing climate change? Because it feels like, with so many things, there's this big dramatic event, and then there's all this urgency created around it to address it. If it is a slow burn, do you think that takes the urgency out of trying to combat this problem?
Yeah, I mean, that's certainly a risk, and that's probably one of the reasons why, there's so much disagreement about how we should communicate climate change, the politics behind it. It's always been contentious. And there's good, I think, a good argument for at least jolting us out of our complacency, via images that are more, salient and some might argue extreme. But I would argue that if you believe in, evidence-based policy, and if you believe in the public's ability to understand and digest even some modicum of data, the data kind of speaks for itself almost overwhelmingly now, that even if you think about just the economic consequences of the slow burn aspect of climate change, putting aside the sort of distant potential annihilation prospect, the data suggests that it makes cost-benefit sense from a societal standpoint to aggressively reduce emissions. Now, how we communicate that, who we communicate that to, in what settings, I'm not an expert in that, and I'm sure that will vary. But if you care about just understanding the basic economics behind, the cost benefit, the social cost benefit of reducing greenhouse gas emissions aggressively, which is what is needed, right? To slow the slow burn. The data sort of speaks for itself at this point, I think.
Well, how do you think about I think the conversation we're having today is going to be a lot different than the conversation we would have had 2 weeks ago, because now Trump has been elected to another term. He's now tapped former New York Congressman Lee Zeldin as EPA chief. This is somebody who's a climate skeptic. We have about a minute left. We're going to do some news and we're going to come back and talk to you more about this. But how do you think about the federal government and the new administration playing a role in everything that you're talking about?
Yeah, that's a great question. I wish I had a crystal ball. I was speaking to one of my colleagues the other day we were just speculating, okay, like how durable do we think the provisions of the Inflation Reduction Act and other legislative measures on climate change that were passed during the Biden administration will be over the next 4 years, and we weren't sure. I don't think anyone is sure about that. I will just say, since I know we need to break, there's a lot of uncertainty there, but my read of the data also suggests that there's a lot of momentum that is more a product of a combination of previous policy and technical change that I imagine will be, will be in the background regardless of what the specific policies are or not taken in this coming administration. So maybe that's room for a little bit of hope.
Yeah, that's interesting. And Mark Gongloff over at Bloomberg Opinion shared with us a lot of progress happening at the local level, at the state level, especially even in the recent election. Hey, we're going to be right back with Jin Sung Park, the new book, Slow Burn, The Hidden Costs of a Warming World.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. Number of earnings after the close of trading. Spotify Technology reported third quarter growth in subscribers and profit margins, saying lower marketing costs and personnel costs helped the music streaming service overcome a tough climate for advertising. After hours right now, we got Spotify up by just about 7.3%. An Instacart reporting strong revenue in the third quarter, a sign of resilience in its core grocery delivery business. However, it did forecast adjusted earnings in the current period that fell short of analysts' expectations. And Cava Group has raised its full-year outlook for a third straight quarter. The restaurant chain posted quarterly sales that beat market expectations. A down day for the Dow, the S&P and NASDAQ as the rally came to a halt. S&P down 17, finishing the day at 5983, below 6,000, down 0.3%. The Dow down 382, drop today of 0.9%. NASDAQ down 17, a decline of 0.1%. 10-year 4.42%, the 2-year 4.34%. Gold down $20 the ounce, down 0.8%, and West Texas Intermediate crude down 0.1%, 67.99 a barrel. Bitcoin up 0.7%, 88,682. Well, as for the market backdrop, Paul Christopher is head of global investment strategy at Wells Fargo Investment Institute, and he was a guest right here on Bloomberg Business Week.
Very welcome respite, and we'll have to see what happens with that CPI number tomorrow. A bad number could give the market a bad jolt. We'll have to see about that.
And, of course, the number drops at 8:30 a.m. Wall Street time. Complete coverage on Bloomberg Radio and Television. A brush fire east of New York's Penn Station has spurred power outages for Amtrak trains running to and from New Haven, Connecticut, prompting lengthy delays for passengers. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. Hey, radio manager Justin Milliner sending us this story.
Yeah.
This is kind of wild.
Very timely.
Very timely. New York City Amtrak trains delayed after brush fire disrupts rail service. A brush fire east of New York Penn Station has spurred power outages for Amtrak trains running to and from New Haven, Connecticut, prompting lengthy delays for passengers.
Yeah, apparently, according to the agency, trains approaching Penn Station are being moved out of the area using diesel-powered engines. All service between New York Penn Station and New Haven suspended for the remainder of the day. Trains between Boston South Station and New Haven are operating at limited capacity. There's a lot of unhappy commuters right now, but again, like you said, this is because of a brush fire.
Exactly. This is again, a visceral reminder of climate change, given that we've seen record heat in the area, record temperatures in the area this month and last month. Let's get back to our Ji-Sung Park, assistant professor at the University of Pennsylvania. He's also an environmental and labor activist. He's got a new book out. It's called Slow Burn, The Hidden Costs of a Warming World. He joins us once again from New York. Ji-Sung, before we went and did some news, you mentioned that you were thinking about the new administration when it comes to policy, when it comes to the Inflation Reduction Act. I'm wondering how you think about government role here versus the role of the market versus the role of individuals. It's a big issue.
Yeah, absolutely. And so maybe it's worth taking a step back and separating out what realm in which we are referring to. When it comes to climate change, right, you can think about mitigation, right, reducing emissions, the energy transition, whatever name you want to put to it, right? The role of government there is in some ways unambiguous, at least in terms of whether there should be some government role, and we can get into why that is. But the short story is that, climate change constitutes a classic negative externality problem and a global public good problem. And so government needs to play some role in setting the market signal straight. Of course, that doesn't mean that government is the only player. There's a huge role to be played by the private sector. We could also talk about what is the government's role in adaptation. I mean, you mentioned the brush fire and what it has done to disrupting rail service between Penn Station and New Haven. I mean, that's just one example of many ways in which we can expect ongoing climate change, regardless of what we do in terms of emissions reductions, how climate change will affect our quality of life And what the government role is there in terms of helping us adapt to those risks is less clear, I think. I think it will depend in large part on, what are the market imperfections at play when it comes to these kinds of adaptation decisions. Are there important information asymmetries, or is there sort of a coordination role to be played? But to answer your question, I think it kind of depends. But certainly in the context of, mitigating emissions so that we can slow global warming and climate change overall, I think it's quite obvious that government has to play at least a catalyzing and sort of price signal setting role, if that makes sense, whether that's with a price on carbon or something else.
Let's talk a little bit more about consequences, because you make the point in the book that it's not just some of the obvious day-to-day consequences that you might think of, but you also talk about lower test scores, for example. You talk about higher crime rates, not issues that people would typically associate with a hotter planet. Draw that link for us.
Yeah, sure. And again, that was one of the motivations, the research that I've engaged in and I'm familiar with, that there's this increasingly intricate and compelling story of how even so-called non-catastrophic amounts of warming appear to have, subtle but cumulatively meaningful and pervasive consequences for day-to-day life. So you mentioned test scores. There are a number of studies that now show that students taking their exams on a hot day, even in a place like New York City, which, is one of the materially wealthiest, places on Earth. Nevertheless, students who take their exam on a 90-degree day, roughly 10% less likely, these are New York City Regents exams, to pass a given subject. Another example that may not be obvious is just thinking about how climate change interacts with the world of work. Even in the United States, again, one of the most highly industrialized countries in the world, there are many millions of workers. In fact, over 2/3 of the roughly 100 million or so workers without a bachelor's degree, who are routinely exposed to the elements on the job. Agriculture workers, construction workers are the first two categories that come to mind, but there are many others. Utility repair crew, warehouse workers, even in some indoor settings where there are already ambient sources of heat or cooling is difficult. There's evidence to suggest that when temperatures rise, and they don't have to be in the triple digits, even moderately elevated temperatures in the 80s and 90s can lead to a significant uptick in the risk of serious accident or injury or illness on the job. So these are the kinds of, what I'm calling subtle climate risks that are more pervasive than first meets the eye, and which, the data and the research that have come online in the past decade plus give us a much better insight into.
Ji-Sung, we have a little over a minute left, so I want to make sure I get this in. It's because it's crucial. How do we make people care? We just went through an election where overwhelmingly what we learned was the only thing that matters is inflation in the economy. That's what polls are showing us. How people feel about their economic situation. How do you get them to care about the temperature that kids take a test in when they can't afford to feed their family at the grocery store?
That's a great question. I don't know if I have a great answer, Tim. But, one way that I've continued to think about this problem is, by clarifying the links between something like climate change and the economy, and making it, maybe moving climate change as an issue out of what has historically been, an environmental policy issue per se, into a more, hey, it actually matters for the broader operating, infrastructure of the economy. It matters for, how we understand economic well-being broadly construed. That may be one way we make people to care a little bit more, but I don't have a great answer, to be honest.
Yeah, I don't know either. It's something that I know a lot of people are thinking about right now. We really appreciate you taking the time this afternoon, spending so much time with us. The new book, Slow Burn, The Hidden Costs of a Warming World. That's our Ji-Sung Park, assistant professor at the University of Pennsylvania, also an environmental and labor economist. You're listening to and watching Bloomberg Business Week. We saw the S&P 500 fall 0.3% today. The NASDAQ fell close to 0.1%.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
It is Bloomberg Business Week. I'm Tim Stenevec. That is Katie Greifeld of Bloomberg News and Bloomberg TV. She's in for Carol Messer this afternoon. What would you like to hear about on Bloomberg Radio? Help make shows like ours even better by taking our Bloomberg Audience Survey. Visit youtube.com/Bloomberg Podcast and click the link in our profile or community section to take the survey. It's hosted by our partners over at Material. Fill it out now at youtube.com/Bloomberg Podcasts. What do you think, Katie?
I think that everyone should take the survey.
Yeah.
And I'm excited to hear what our listeners want to hear about. Maybe they want to hear about Apple.
I think they do.
Yeah, so let's talk about it. Apple, according to reporting from our own Mark Gurman, is readying a smart home push with an AI-focused wall tablet device. It would be a new product category, a wall-mounted display that can control appliances. It can handle video conferencing, and it will use AI to navigate apps. I have to say, I don't know. Is this that revolutionary? I feel like versions of this exist.
Yeah, well, that's why they're saying, I guess, to catch up with rivals, I guess.
Yeah.
I don't have anything like this in my home.
No, me neither.
I don't have any interest in it right now, but, you know, I said for years I wouldn't buy an iPad, and I use an iPad all the time now.
Yeah, you know, I resisted the smartphone for a long time.
You did?
I had a BlackBerry into college.
That tracks.
I loved my BlackBerry. But anyway, the company is gearing up to announce the device as early as March. It's going to position it as a command center for the home. This is according to people familiar with the matter. The product, codenamed J490, it will also spotlight the new Apple Intelligence AI platform, of course, something that Apple is trying to put front and center here. And we'll see what the uptake is. A command center for the home. Again, I feel like this exists. I've, firsthand experience of being able to like turn off lights in different parts of the home with one of these command centers. But this one will have some AI bells and whistles, I suppose.
Yeah, it will. I can't get my washing machine to connect to the internet.
Why would you need it to?
That's a good question. It still works fine, but it actually is a Wi-Fi enabled washing machine.
Can you tell me about that though?
It's not even connect. It doesn't connect to the internet. So if it can't connect to the internet, how would I be able to use a?
Did you make the decision to buy that washing machine? It just came with your apartment.
Yeah.
Again, yeah.
I think all new things have like these just chip Bluetooth, or not Bluetooth, but like Wi-Fi chips.
Yeah. Well, in any case, this device, it's going to have a roughly 6-inch screen. It'll look like a square iPad, according to Mark Gurman's story. This is about the size of 2 iPhones side by side. It should have a thick edge around the display. There's also going to be a camera at the top front, a rechargeable built-in battery and internal speakers. Who's going to be like standing up in front of this tablet doing a video call?
Well, also, I'm wondering, why don't they just use an iPad? Like, why don't they just redesign an iPad to, because I actually was over at someone's house the other day, and they had integrated iPads in the walls as their command center.
That makes sense.
That totally makes sense. Tim Cook is betting the product can make Apple a force in the smart home segment, where the company has trailed behind Alphabet and Amazon. In recent years, he's made the device a priority for the company's engineering and design departments. He's pushing to get it to market after more than 3 years in development.
Well, you think about the headway that Amazon has made when it comes to the home device space. Alexa, the Echo, for example. You have Google's Nest Hub. They are playing catch up here.
Yeah, that's a really good point. Hey, there is a redhead crossing the Bloomberg terminal.
Uh-oh.
Yeah, the Wall Street Journal is reporting that Wonder, it's the food delivery startup. It was founded by Mark Lorry of Jet.com, then Walmart. He actually worked at Tops, or he sold a company to Tops very early in his career. It's in advanced talks to buy Grubhub from Europe's Just Eat takeaway. This is according to people familiar with the matter. Again, the Wall Street Journal reporting this.
That's pretty wild.
Have you been to Wonder or ordered from Wonder?
No.
Neither have I. One of them opened.
We're so well equipped for this conversation.
I know, we're not well equipped for either of these conversations. Don't have smart home device and never ordered from Wonder.
No.
A Wonder opened near my apartment.
Did it?
Yeah. And
did you go?
No, haven't been.
Okay, good.
But I keep getting mail from them too.
Oh.
Yeah.
So they know
the
where
idea
you
is
live.
that you order like high-end restaurant food.
Yeah.
That's the concept behind it.
Okay.
So it's like you're not just ordering from the local, Thai place. You're ordering from the, celebrity chef restaurant that.
Interesting.
Yeah.
I actually just deleted Grubhub from my phone.
Why?
I was just going through an app clear out. It was looking pretty cluttered. I needed some storage, and I never do the ordering anyway.
You live in Manhattan.
Yeah.
You can just walk out and get food.
Yeah. Also, my husband just does.
He does everything.
Everything food related is on his plate.
Once again, Wall Street Journal reporting that former Walmart executive startup nearing a deal to buy Grubhub. Grubhub likely to be valued below $1 billion in any deal.
That's wild.
That is weird.
Yeah, that's a small valuation. You think about Grubhub, for example. Everyone knows what Grubhub is, but of course it's a private company, so it's interesting that the valuation for all that name recognition below $1 billion in any deal. But it's also a sign of the times that we think that is not that impressive. $1 billion for a private company used to be a huge deal.
That's how much Facebook bought Instagram for back in 2012.
That was